Hi, you're watching ET Markets live stream. I'm Neha Vashisht. Joining me today is Mr. Kranti Batini. He is an equity strategist at Wealth Mills Securities. Thank you so much, Mr. Kranti, for taking out time and joining us today on ET Markets live stream.
Thank you, Neha. Thanks for your invitation to share my market views with you and with all the viewers of ET Markets. Thank you. And season greetings to you.
Well, I hope the same for you and everyone who is watching us today. So let's quickly start with the season of Diwali only. And Diwali is just around the corner. We all know that we did see a lot of ups and downs in the markets lately, but this week was quite positive for the markets, even though the Q2 numbers were not that strong. So what's happening in the markets right now?
Yeah, Neha, markets have been in a consolidation phase, but last few days have been a strong days for the market. We have witnessed a selective buying in the market, and
Hmm.
what is prompting the strength in the market is one thing is the FPI selling has came down and they have become the net sellers. That's where
Hmm.
we could able to gather some kind of a strength and support, and market decisively closed above 25,500, which is a very positive move for the market in the medium to short term. So that's where
Hmm.
the positivity has came back. FPIs are become the net buyers right now. Market could able to hold on to these levels. If the FPIs, if they turn to be the net sellers, okay, that's where we can expect some kind of a positive momentum, and market don't get surprised if the market hits the new highs, because we are just 600 points away from the all-time high again.
Hmm.
So some kind of a strength we can gather, but the previous history, if you see last 18 months and all, somewhere if market comes to this kind of a range, somewhere the other, the geopolitical or some kind of a external escalations have been creating some kind of a selling pressure in the market in this range. So we need to closely watch you next few days, next few weeks, how things are going to evolve, how the earning season is going to evolve, and whether we can get some kind of a cushion from the earning season for the markets to hold on to these levels. Next few days, the earning season will lead the market, and the geopolitical things will lead the market to sustain at this range.
All right. Let's also talk about banking. Nifty Bank hit a fresh all-time high today, and Nifty Bank has actually outperformed the Nifty 50 so far in 2025. Banking index is up over 13% compared to 9% gains of Nifty. So, what is happening when it comes to Nifty Bank, and why is it happening?
Neha, banks and financial services stocks have been in a consolidation phase uh, from the last 1 year. By and large, we
Hmm.
have not witnessed any major moves in the banking and financial services. It can be PSUs or it can be private sector banks. By and large, they have been in a consolidation phase. As the Nifty came to the range of 25,500, some kind of a selective buying has been taking place in the large cap private sector banks, and also in the PSU large cap banks are concerned
Hmm.
right now. The valuations looks attractive on a longer term basis, and also uh, there is a anticipation of a definite rate cut in the upcoming monetary policy, because the inflation has cooled down, and
Yeah.
the Fed is clearly indicating a rate cut cycle. So that's where the buying interest has renewed buying interest has came in the banking and financial services stocks at this point of time. So if the investors have a medium to long term horizon, definitely one can add banks with a medium to long term horizon. It can be both private as well as public sector banks.
Okay. All right. So now coming to Nifty, even though Nifty has performed a little less in compared to Nifty Bank this year, Nifty also hit a 52-week high due to the Diwali boom. So what are the top reasons why is Nifty up right now, and what is next for Nifty?
Neha, as you rightly mentioned, last 1 year market has been choppy and they have been in a range bound.
Hmm.
Always the market was hitting the 25,500 level, and again it's going down to the range of 24,750, 24,500. And the
Mm.
market has what the headline indices have done in the last 1 year is the movement of 1,000 points on a Nifty. That's what we witnessed. So by and large, what we witnessed was a stock specific and sector specific movements as per the headline indices are concerned in the past 1 year, from this Diwali to last Diwali. Uh,
Mm.
Going ahead, what makes the market to sustain at this range? First thing is the earning momentum is needed. What we have is we have the strong liquidity thanks to the
Yeah.
domestic institutional investors and the retail investors are concerned. The markets are buoyant during this period. We have a strong liquidity, one of the strong reason for this sustainability in the market. And also we need to take into cognizance last one
Mm.
year the foreign portfolio investors they have withdrawn nearly more than 2 lakh crores, and in the month of August itself they withdrawn for a tune of around $6 billion. So uh, if at all the same kind of withdrawal happened 10 15 years back, market would have been in a very narrow corrective phase, a
Yeah.
long corrective phase. But this time we have not witnessed any kind of a sense of correction in the market. What we have witnessed is a time wise correction, but the stock specific moves have been taking the markets to sustain in this range. So by and large, what's going to sustain the market at this range is we have a strong liquidity. That's the key reason. But what's the
Mm.
missing part in these markets are the earnings momentum. We have
Yeah.
we are having a subdued kind of a earnings momentum, but markets always forward looking animals. The kind of the domestic macros right now we are in, we have global crude oil prices which are very much favorable to India. The inflation has cooled off. Monetary policy has been weighing for a rate cut cycle, and
Mm.
there is a strong sense of domestic liquidity. So everything has to transform into earnings. That's where market has been waiting. Given the kind of the current momentum in the consumer demand, and we had a very good monsoon. So all these factors are going to boost the earnings of the company's consumer spending in the coming quarters. That's where the market could able to sustain in the range of 25,500 or 25,000 at this point of time in the medium to short term.
Okay. Let's talk globally also. How has the India-US trade talks impacted the markets? We did see that today the markets were positive, and one of the reasons why the markets reacted positively was this also. But what is the broader aspect of this entire trade situation right now?
Neha, everybody crossed their fingers uh, uh, across the globe how things are going to evolve. Okay, by and large,
Mm.
the talks have been progressing. It's taking time, but by and large, there would be a win and win trade deal going to be. Despite of the provocative statements from the U.S. administration, uh, our Indian administration has been very much composed. They could able to uh, um, uh, negotiate and renegotiate at some point of time. Okay, there was a standoff in terms of the negotiations are concerned, but
Mm.
the negotiations started again. So as the final blueprint of this US India trade deal comes, and if there is a relaxation of the tariff on India, that gives a very strong positive signal to the investors across the globe. What's creating some kind of a skittishness in the medium to short term has been India and US trade relation. That's where the foreign portfolio investors have been expressing some kind of a discomfort to pour the money in Indian markets, despite of the positive outlook what we have at this point of time. If that gives a clarity, if that
Mm.
obscurity goes out, we can see the foreign portfolio investors coming back to India. Even the long only funds have been staying on sidelines in between, so they can come back to Indian markets vigorously.
All right. We've talked about banking sector. Let's also talk about some sectors that could see uptick from here on. So what to watch out from here at this point in time?
One thing, Neha, infrastructure sector looks very positive. Their valuations are very attractive on a medium to longer term basis. As the government of India want to be at a going at a strong note to increase the growth momentum. Infrastructure sector
Hmm.
is going to get benefited, and there are some other sectors like the engineering and construction. As we are right now mainly focusing on the Make in India Atmanirbhar Bharat, there are capital goods and engineering and uh, uh, the defense. Still, the flower have not went out. Okay, sometimes we tend to come across they are in a bubble territory or something. Okay, but given the kind of a longer term, of course, the valuations are pricey. But given the kind
Hmm.
of the scope for this sector, okay, can do provide good opportunities for the longer term investors. In a medium to short term, of course, the valuations look stretched, but when there is a correction, if the investor have a time horizon, definitely still defense is the sector. And also the new age sectors have been emerging at this point of time. It can be the fintech kind of a thing. Of course, the valuations are
Okay.
pricey, but
Hmm.
aerospace, which is at a budding stage for me in India, the many
Hmm.
of the global aviation giants have been starting up their manufacturing operations, and they are having tie-ups with the Indian manufacturers. Yesterday, Rolls-Royce have a tie-up with the Bharat Forge to manufacture the aviation blades in India, which is a very positive signal for this kind of aerospace industry. So the space has been at a very nascent stage. It's just like 30 years back, IT industry, how it's taking place. That kind of a boom we are in with respect to the aerospace industry is concerned in India. And also
Hmm.
the nuclear power, as India has to grow and double the GDP. One of the key important sector is the alternative fuels and the uh, 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 and uh, and the green energy, and in that
Hmm.
also the nuclear power. We are at a very nascent stage. Companies which are involved in the nuclear power also, they're going to get benefited. They're at a scratching stage, so it will take time
Yeah.
to understand and emerge the industry. 10 years back, we don't have any defense sector in India. We have
Hmm.
today a whole lot of defense companies manufacturing and in a consulting industry of defense in India.
Hmm.
And defense has been one of the outperforming sector. So like that, even the semiconductor industry is emerging at this point of time. The companies involved in the semiconductor industries and who are making actual progress in semiconductor industry, they are going to benefit it. And there are chemicals and gases which are industrial gases companies which are vital for this manufacturing that semiconductors and all. They are going to get benefited for a period of time. So these are the sectors I'm looking forward for the new Samvad and the new year.
All right. And what is your thought on consumption uh, sector? Because of GST 2.0, do you think it's going to drive a little boom in the sector of consumption right now or in the near future?
Uh, Neha, definitely. The GST has given a kickstarter to whole lot of consumption patterns are concerned. Uh, if just to understand the consumption, just call up any auto dealer and ask, okay, when will I get a car delivery? They're clueless because the kind of demand they have, the outpouring of demand they have,
Hmm.
it is taking time. Even what was missing part in India was in the earlier quarters have been the entry level cars have been struggling in India. Right now,
Yeah.
we have seen due to the reduction of GST, even the two wheeler drivers, two wheeler owners are shifting their next buying into the entry level cars. Okay, which is a big booster. And one automobile that sold in India, we tend to say
Hmm.
car sales, car sales. What does it mean for the economy and to the markets? One car that sold in India, it directly and indirectly creates uh, a lot of employment. It creates the demand for the steel. So the steel sector is going to benefit it. and the manufacturing accessories. So directly, indirectly, one car is going to create 100 employments directly and indirectly. So it's going to increase the consumption over a period of time. So that's what the reason
Okay.
car sales are very important, to tune the mood of the market. Coming to your point, we had a beautiful, fantastic listing last this week. LG Electronics got listed at a
Hmm.
50% premium. That shows the disposable incomes, how they are going up in India. And
Yeah.
Nestle, yesterday they declared the results. We can see some kind of uh, uh, renewed demand in the earnings at this point
Hmm.
of time. So definitely the consumer demand is going to go up. Disposable, as the disposable incomes goes up, these whole lot of sectors in the consumer demand and consumer sector, it's a broader meaning at this point of time. Consumer means it's not related to just to FMCG. It
Yeah.
have a wider scope at this point of time, and they're going to get benefited in the next coming quarters.
All right. So before we close, let's talk about Nifty levels to watch out for next week and also your Diwali advice to investors.
Neha, for the Nifty right now, what I'm sensing is the sustainability is very crucial at this point of time. If
Hmm.
Nifty could able to sustain 25,500 level, so we can see some kind of a further movement, further leg up rally in the market. The result season is going on. If we get a support from the result season, that gives and increases the margin of safety. So earlier, the near term strong support level for the market on a monthly basis is 24,750. That's what we used to watch closely. Right now, that support level should become 25,500. So when
Hmm.
that base formation happens, we can see some kind of a potential upside for the Nifty to move further. We can see till the time
Okay.
the market can consolidate in this time, uh, for some more time, until unless we get a strong support from the earnings, or
Hmm.
uh, the FIS has to turn as the net buyers. So these are the crucial
Okay.
things. One need to wait and watch for the level of 25,500 for Nifty.
All right. And what is your Diwali advice to investors?
The first and foremost, Neha, this market and the global geopolitical issues, we never thought the kind of rally what we witnessed in silver and gold. There was a mad
Hmm.
rush. Things are changing very fast. There is a global reset is that's taking place. So investors should nimble to the changes in the entire spectrum of the factors that are influencing the market at this point of time. But still, we are quite positive with respect to, despite of outperformance of gold and silver, equities tend to outperform on a longer term basis. Commodities, they run in cycles. Okay, so this is the peak of the cycle, most probably. But equities are going to perform well. The company earnings are going to get boosted in the next coming
Hmm.
quarters. So any dip on Indian markets, it's a warranted buy for the investor. Uh, Stay for long term, but don't ignore the short term.
Superb. Well, this marks the end of our segment for today. Thank you so much, Mr. Kranti, for taking out time and joining us today on ET Markets live stream. Before we close, I want to wish everyone a very happy Diwali and wish you and your team a very happy Diwali as well.
Thank you, Neha. Season greetings. Happy Diwali to you and a prosperous new year.
Thank you so much. Thank you, everyone, for joining us today.